Yeah, hello and welcome to another update video about Chainlink. So Chainlink did break finally out of this range. It shows the downward path, and it seems like this Elliott wave triangle did eventually break to the downside by breaking below $6. We had already the major warning. That was the 78.6 fib level. I think the warning came yesterday. And it now broke below that critical level, which was first of all $6 and now $5.30. With that, it is steering towards our bearish target around 290 to 350. Doesn't need to go down that low, and I need to see a little bit more structure to suggest really the micro count for this move down. But at the moment, it doesn't look as if it's finished yet. And as a means to identify the reversal, personally, because there is really a difficult, we've got a difficult structure here, but looking at it, if you add the volume and you take a look at where did actually the sell-off volume start, that was here in this particular candle. Obviously, that's the 8-hour chart. If we go to the 4-hour, you can see it's basically above that level. It's basically above the $6 level. Not without reason I gave you that $6 level, or to be exact, it was $6.03, the 78.6 fib level of the move to the upside, okay? Because a crash below that level, a drop below that level, did lead to a like 17% drop. And I hope everybody finally is understanding the value of stop losses. These levels that I give you, I don't give them to you for fun. They are really typically the levels where probabilities shift towards new lows, new bear market lows. Now, in this case, obviously things happen so quickly, I couldn't do a video after breaking support. It just flashed down. But that's why stops are so important. Unless you're prepared to risk everything, then you don't need a stop, right? But this would have protected you from a 17% price drop if, you had a trading position here. Now, I think this is now heading down in this fifth wave. It certainly has some more space to head down lower. What we can do is we can take the height of the triangle. So it's not a very it's not a nice contracting triangle, but it is an absolutely valid Elliott wave triangle. We can take the height of the triangle at the beginning of the triangle, and then one way of measuring target is to add it to the end of the E wave, and then we get actually a target at 435. I think that's certainly a level to watch. 435. I will add a dotted line here, so just that we remember this level roundabout. Another way is to add it to the low of the breakout point. Well, see, that would actually take us to 787 cents, so it's a bit ridiculous. I think from a just purely measuring the target point of view, we could take a look at 430 to 435. And there were some Fibonacci extension levels that pointed into this direction down here. So we can pay attention to that as well. But for now, until I don't see an impulsive reversal to the upside, again, a first sign would be a break above $6. I remain focused on the downside. Okay. So yeah, that's my update about Link at the moment. We need to let the dust settle a little bit, okay? And then we can define targets a little bit more accurately, I think, in the next few days or so. At the moment, it just means that unless we see an impulsive reversal above $6, I would remain focused here on the downside. Okay, that's my update about Link. I hope you will like the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.